Good afternoon, everyone, and welcome to Stock Market Today for Friday, June 27th. It's Alissa Coram here, and we're ending the week on a high note, literally, with new highs for the NASDAQ and the S&P 500, at least the last I looked, right ahead of the closing bell. And joining me now to break down this week's market action is my colleague, Mike Webster. Webby, what a week it was.
Oh man, I'm so glad it's Friday. I just got to say, it's been another wild week and a very busy week, and we got a lot to talk about. It should be a fun show.
Yeah, we sure do. We'll give a high level look at the major indexes. We'll also discuss the sector action, some stocks to watch, and then we will go over to Webby's charts for that in depth perspective that we need for positioning as individual active investors. A great guide for us every single week. And you know, Webby, I was not with you and Justin last Friday.
Slacker.
I
You need to work
know.
harder.
But I'm sure you guys talked about that 21-day line. We've been talking about it not all rally long, but really all year long, or really since your return, but it's become especially important in the last couple of months. And as we entered this power trend, and that 21-day line did its exact job this week. And kudos to you. We kicked things off Monday morning on IBD Live with the game plan of what do we do? This is a critical juncture. And you and I on this show, every time we've had these pullbacks at or near the 21-day line, we've talked about just how pivotal that is when you're in a power trend.
Yeah. So if folks are new, then the 21-day exponential moving average is going to be new, but it's that green line on there. And I have to say, of all the things that I've discovered and things in the market, it's the simplest and the best. And really tried to discovered it after a long back test and work that I did in the late 90s, and have been using it heavily ever since. Is my go-to. And this market is a classic example of it. If you just look at the left side of the bear market, it's pretty much contained underneath the 21-day. And then the right side bull market is pretty much contained above it. And sometimes simple things really work. And we all, myself included, have a tendency to try to look, too deep into things and read too much into it when it's really the very simple thing. And that's why we talk about the Webby RSI later on in the show that is around the 21-day. And it's just so key. So what happened this week was our first real test of the 21-day that we've had. We had one earlier on, back in April, and we successfully passed that one. But this one now happened.
Yeah, the S&P came a little closer in a prior test.
Yes, exactly. But this was the first real test since the significant test since the power trend, is gotten underway, and we're far into that at this point. And so what we found with the power trend is really when you close below your 21-day, you really need to, ease off that gas and depending on how it does it, even, tap the brakes, not slam on the brakes, but tap the brakes pretty hard and stay off that gas until you're back above it. So if on Monday we would have closed underneath it, we would be talking completely differently right now, because we would be more in a defensive mode. Rather, now we're in offense, but we're sticking straight up in the air. So you're going to have times like today when you got the news with the trade related headlines, with President Trump and Canada and all of that, and we don't know how that's really going to play out. Tends to be a lot of negotiations, but it could get a lot worse. It could get a lot better. We don't know. But you get those short sell-offs that are very brutal, and sometimes those can last longer, than just intraday. We saw that, a month ago when we came down close to the 21-day, or even, earlier this week. So you do need to take action if you're trading aggressively. Now, if you're trading more conservatively and more orthodox position trading, you can just sit back and, kind of lean on the weekly charts as long as you're above the 21-day on the index level. But if you're, swing trading or, pushing the gas hard, the way I like to do, when you start selling off, you've got to take some action, because otherwise, if you wait until it's really ugly, then that you don't want to be selling into that. So it's really a gradual thing,
Mhm.
in, out, and if
Incremental.
that's how you like to trade. Now, you, on the other hand, you're so much more patient, and I love how you trade. Like, you just sit back and you go for the big moves, not all the wiggles and wobbles. And I think a lot of people can learn, from you, from that standpoint. And you're just the queen of holding,
Well, I've
frankly.
learned a lot from you,
Oh,
and
you
I
figured it out yourself. You're fine.
and no, really, that 21 day, I tell you, when I started aligning market timing strategies with my stock selection, everything else kind of fell into place. I was able to get positioned early on at the turn. And as we continue to make progress and as we continue to hold that 21 day, because in the power trend rules that you and Justin and Chuck developed, during a power trend is when you want to give your winners more room to run, right? So that's
Exactly.
also what has given me the confidence to hold my winners. I got a toe hold. Now let's try to give them room to work, unless they're flashing major sell signals. But the other thing that I really like about the 21 day is we've really been, I think, emphasizing on this show each week, when you get a pullback to that level in a power trend, that does turn into a press the gas moment. And that's exactly what we had discussed. Worked beautifully this week.
Yeah, so we pressed the gas late on Monday, because early on Monday, it was at the breaking point where it could have gone either way. So you had to be prepared for that. And I like easing off into that, because as I was saying, so you're not, if it would have crashed through that 21 day and we would have had a waterfall sell off, you don't want to be selling into that if you can avoid it. So you sell, you know proactively. But then I turned back around by the end of the day, and it was just slamming on that gas and doing that throughout the week. Now today, with some of the intraday action, I had to back away on some things, but the close was beautiful. Like,
Yeah.
we did have, I believe, the Russell rebalancing, so you're going to have a lot of funky, dirty volume today. So you don't. I take that with a grain of salt, if you look at volume, which most people do. But yeah, it
Mhm,
was very successful close. Like, you can't
mhm,
ask for a close more better than this going into the weekend. But we do have those headlines, so we're going to get those gyrations. That's why you want to take a step back, and why we're focusing on, we are still in a power trend. So a power trend will end when the 21 day goes back through the 50 days. So that's a long way down. So that's when it's over, but that's not when you start getting defensive. You start getting defensive when you close below the 21 day. And then the low gets back above the 21 day, you can put the gas back on. But yeah, that's, I mean, the discovery that the three of us made with the power trend was, it's really helped a lot. And I think most folks probably position trade versus swing trade, and this is the time where you want to let those winners really work and let them wiggle and wobble. You can use, whether you use the quicksand, Grateful Dead rules, RS line rules, or just
mhm,
holding the 50-day simple moving average, or any other just basic things. Let those
mhm,
winners just run. Now, if you'd like to be super active the way I do, then that's a different game. But this is really a perfect time for both swing trading and position trading. But frankly, right now, position trading is probably better than swing trading, because the gyrations have been just enough to trigger
yeah,
a lot of stop losses. I've been getting chopped up in a lot of my swing trades, just because it just comes down just enough to have to
mhm,
back away. So with that, I'm leaning more towards trading ETFs. So I've
mhm,
got bigger positions in my ETFs in my own account, as well as with Swing Trader, because that is what's working right now, even better than the individual stocks. Well, I mean, if you get the exact right one, that's different. But on balance, sticking with the ETFs that are working is,
mhm.
like, I'm heavy in the TQQ and the Qs and the UPRO and things like that, and SMH, which we're going to talk about.
Yeah. And I also have positioned in a number of those leveraged ETFs that you mentioned. And I would also say, so Monday, definitely towards the close, a press the gas moment, even Tuesday, but you said all week long. It's been time to lean aggressively. Things are getting a little stretched here, but we have to just repeat the statement that we made at the beginning of the show that we're now in new high territory, clearing all of this digestion that we saw in that December, January, early February timeframe above that, which coincided with the round number. We know these round numbers can be psychological levels. We're back above 20,000. So, what would be normal and natural from here, Webby?
So go to the weekly chart for a second. And really, an inside week next week, it would be kind of a worst case scenario base case, meaning what would be normal, but an inside week, meaning staying within the high and the low of this week. So let's assume we get some negative news over the weekend or some selling in the post, Russell rebalancing. And if we were to just doodle around and stay within that, I'd consider that a win. But what you want to have is like if you look back to like the three waves down that we had back in
Mhm.
20, yeah, exactly. I don't need to be here. So
Well, when you say 3 waves down, that's the one I think of.
yeah,
That was a key time for me.
yeah. So with that, and I know you pressed the gas heavy on the TQQs there. So with that, that's what I'm hoping happens, which is normal, which you just kind of build, because now you're breaking out of this base, right? And base breakouts, lots of times you just inch up because everyone's waiting for that pullback, and that's what
Yep,
pushes things higher. You get shorts going, okay, it's going to pull back. I'm going to start shorting now. And then they get run in and it goes up higher. And then eventually it does pull back,
mhm,
we're in such a heavy news environment now that
right.
those pullbacks, especially intraday, are going to be violent and algo text reading algo related. But from a weekly standpoint, if you just take a step back and look at this, you can't go below this week's low. Like that would be abnormal. So that's your line in the sand. And what's great using charts is you're constantly just ratcheting up that worst case scenario line in the sand. So now that's 4.25.
Mhm.
Well, we're up 4.25% for the week. So about in that ballpark of where that low is. And so that's what you're risking on the downside by keeping that gas pedal down heavy. But let's hope we don't have an inside week next week. But it is a holiday week. We close early
Yes,
on Thursday,
Thursday.
and then Friday is off, and that's U.S. based only.
Yeah,
Because it is 4th of July and all. So that does make it a little tricky because you got to remember the rest of the markets are going to be open. As far as I know, the rest of the world doesn't celebrate 4th of July. So they are, those markets will be open. And many of our big stocks trade on foreign markets as well. So there'll be movement in there that we're going to be playing catch up on coming back from the 4th of July weekend. So
mhm,
that could be a really good thing or, a difficult day. I hate those 3-day weekends that are
mhm.
US based.
Yeah, we'll have to see what the market gives us, but no doubt a very bullish week after a couple of bullish months here, starting with that April 22nd follow through day. Another notable development this week, and then we'll move on, is the fact that we do now have that the proper stacking of these moving averages, right? We have the 10 week now above the 40 week. They're both rising. Taking a look at the daily, we're right there. The 50-day is right about to cross above that 200-day. So that also is a positive development, wouldn't you say, Webby?
Yes, it is. So people call that the golden cross on the way up and the death cross on the way down. And what's cool about those are the names, and that's about that's about the coolest part of it. I wish I came up with those names, but they're late signals. But it is so you don't use it as a signal, but you use it as kind of a condition. So
Yes,
you're now in a
exactly.
condition
Yeah.
where, like you said, you're stacked in the right order, where your short-term moving average is above your intermediate and your longer term, and then your very long term with your 200-day, they're in the right order, and that's exactly what you want to see. And then when eventually this run is over, you'll start curling back, and one by one you'll start losing those. So this is when a trend starts, it's the old thing, something, an object in motion tends to stay in motion, and that's what the whole power trend is about, is recognizing that as early on as possible and trying to ride that, until it's over. And so we will see how this one plays out. But right now, looks really good. I hate saying that because every
Yeah.
time I say that, then
You
we
feel
get some
good?
negative news. So
Yeah.
I would like to say, for the record, it looks terrible. But you
Right.
know, I I know we're going long on this segment, but you do want to keep
It's
in
an
mind that a
important
lot of people will go and look and find, if you're bearish or you miss this rally, you're light in the market, or you're just negative on the market for whatever reason, you're fighting the tape. You can always find reasons why
Mhm.
why you shouldn't be in the market, or to say, oh well, because this indicator or this pet thing that you found on the internet is bad, that, oh, you should be very scared. Well, you should be scared when the market looks terrible. Right now the market doesn't look terrible, so you shouldn't be scared. It's all these other little things are going to keep you from it's just going to confuse you. And that's something I learned from Bill
Mhm.
O'Neill, the founder of IBD. He would just look at the index itself, and he was really big on that. He wouldn't look at all these other this stuff that I just refer to as noise.
Yeah.
Look at variations of the on the just the price.
Yeah. Optimistic does not mean complacent.
Oh yeah.
And as we say all the time, trend lines over headlines, right? Let's let the charts be our guide. And they definitely have. Okay, moving on. I'm just quickly going to show the S&P 500, give an update there. We also are in new high ground as of this week, finding support of the 21-day, getting above 6,000 and then some, also clearing the prior marked high at 61.47. Quick look at blue chips here, also making progress, getting close to that 44,000 level. The Dow is. And then a quick look at the Russell 2000 right at the 200-day line. That's been a level of resistance in the past. This has been a lagging index, the small caps, basically keeping pace with the S&P 500. We'll have to see if it can get above the 200-day line next week. But, more participation is good, right? We want to see more areas of the market participating. Obviously, we are always focused on the leaders of every market cycle, but it doesn't hurt to get broad participation. So speaking of, let's just check in on the RSP. I know this is your favorite breadth measure, Webby, and we're not seeing new highs yet, but I know you've said over longer periods, you're not going to get that outperformance. But just looking short term here, we are clearing, getting above the highest levels in a little while here. So that's a positive development.
Yeah, very positive, frankly, because on some levels we're looking at things and feel very stretched, right? Like they're really extended, and extended is scary. But then you look at the average stock, and the
Hmm.
average stock is just breaking out. It's a weak breakout. I mean, you can't say that going up 0.37 as you're breaking out is powerful, but at least you broke out in what was some negative news going out in the market right now. So your average stock is moving up. Let's pull up FNGS,
Yeah.
because that's the flip side. That's what's leading. These are your mega caps, your top 10, give or take. And that RS line, as you're showing, has really been trending up. RSP, that's always going to have a weak RS line given over a long period of time, just because it's 500 stocks equally weighted versus a market cap weighted. But this is telling you that the market is healthy, because we don't like that the IWM is not participating, or that your average stock is lagging these things, but it is what you're given. So you trade what you're given, not what you want. And the FNGS, I don't know why I don't have a position in it. I guess because I have the TQQ and UPRO and stuff. I just
Yeah.
didn't want to have too much. But
Hmm.
this is really where the money is flowing, and a lot of those big caps don't still have a ways to go before they're even really extended.
Yeah.
So this one can go a lot further than folks think, but you can't buy it up here. But it's just a way of looking at the health of the market.
Yes, well said. And we'll be taking a look at one of those mega caps here shortly. Okay, moving on. Let's take a look at some sectors. We'll try to breeze through this. There's
Yeah.
one area of the market in particular that we want to highlight. So we'll get to that. But here's a look at energy. I mean, tied to geopolitical tensions, as we know, heavy weightings in Chevron and Exxon, but also the price of oil has been kind of all over the place lately. No surprise. Energy is lagging here. So, definitely a big dip in that relative strength line this week. Healthcare also continues to lag. I think Justin had pointed out RSPH, the equal weighted healthcare ETF, had a nice day of outperformance on Tuesday, I believe it was. There was some news related to RFK Jr. Talking about the promise of wearables and using those for health rather than prescription drugs, perhaps. So maybe a little bit of excitement there, at least in the short term, with the likes of Abbott with that 1 day pop. But at any rate, not our superstar sector right now. XLK, we talked about FNGS. So XLK, the tech sector, does continue to outperform here off of the lows and had a really nice week this week. Then we have the materials sector underneath the 200-day line. That relative strength continues to lag. Utilities, this is a mixed bag here between your defensive as well as some of the AI adjacent plays. And that's really where we're focused, is when you have the utility stocks that are acting like AI stocks and showing that strong growth. So underneath the surface here in this sector, there are some worth taking a closer look at. XLF had an interesting week here. JP Morgan is one that comes to mind that has been running as of late. So there are a number of compelling names to watch in the financial sector right now. XLRE real estate really lagging this week. But that is not an area that we typically, as growth investors, flock to in a meaningful way anyway. Same can be said about staples. And, we do want more participation, but if there are going to be areas of the market that are lagging, we are totally okay with the defensive areas taking a backseat, and that they are right now. So XLP continuing to lag from that relative strength standpoint. And here's industrials breaking out this week. So you have your GE, your Boeing, your Uber, even in here, which full disclosure, I do own some Uber, but a breakout here this week for the industrial sector. And let me reset my price scale there, Webby, before you blow a gasket. And then XLC Communication Services, a breakout here. So after going tight for 3 weeks, XLC, you definitely have mega cap exposure here too. A big breakout up 4.7% for the week. And then we'll round things out with a look at XLY. This is consumer discretionary. You have your Tesla and your Amazon in here. And so we saw a notable move, especially on Friday after a digestion period, clearing the last couple of months of action. And then one more area. Let's take a look at SMH, talking about big breakouts this week. Chips definitely got in gear in a big way. They have been outperforming off of the lows, but I think a pretty significant move this week for chips, Webby, with SMH up, get this, 7%. Your thoughts?
Yeah, so I do have a position in SMH, and I believe you mentioned Amazon. I do have a position in that as well. So with the SMH, this is a tricky one because let's take a look at NVIDIA, which is obviously, the one that everyone, loves because let's just go to the monthly, you know.
Yeah, a notable week for NVIDIA as well, which we definitely wanted to mention with it breaking out to fresh highs.
Yeah, monster move. Frankly, and now let's toggle over to the weekly for a second. Um, you know, I really thought we were going to stay in a basing area for a lot longer. I thought this was going to sit out this bull market, and this stock had different ideas, so it's moving. And so, rather than going with Nvidia, what I decided to do was to go with the SMH and Soxel, depending on the account. And we do have an oversized position on swing trader on in the SMH, because it was a way of whether you're deciding is AMD going to be better, is
Mhm.
Avago, which I have a position in, or Broadcom, whatever it's called these days, the AVGO, that that one, is that going to work? Is it going to be the A lab? Who is going to win? And
Mhm.
I just feel that sometimes it's just better to play the sectors, the
Yeah.
sector ETF. There was a time where it was just clear you wanted to go with Nvidia. Or a good friend, Scott Sinclair, would always say, well, if you want a chip, just buy Nvidia. Or however, the funny way he would say it
Yeah.
is, just buy Nvidia. And I just don't know that we're in that moment still of just where it's just clearly Nvidia, because let's pull up the AVGO for a second. I think this one acts better than NVIDIA, and it doesn't have the same baggage that NVIDIA has. What NVIDIA has is everyone knows about it, and everyone, non-traders know about it. Non-traders don't really talk. You don't hear people talk about Broadcom or Avago. You just hear them talk about NVIDIA, or maybe they'll talk about AMD or Taiwan Semi, which also looks good. So just play, that's how I like to look at it. Just go ahead and go with the, sector ETF, and then add to it by having,
Mhm.
if you want to have a bigger position in Nvidia or Broadcom or whatever, and then buy some of that in addition to, which is how I'm playing that. But if this is for real, when the chips move, they tend to move for a
Yes.
long period of time. So we'll see. I don't see how the chips fail without the market failing too.
Yep.
So it's just a very high octane way. And with all the news out there, President Trump or China or someone there could be some headline that comes out that really hits it hard. So you've got to be careful about how much exposure you have there, because we saw with the Deep Seek day.
Yeah.
Let's go to the daily. I mean, that was brutal.
It was
So if
brutal.
you're too overweight there, which I am right now, that in something like that happens, it's going to be brutal. So if you're aware of that, you have to adjust the rest of your account accordingly
Mhm.
to how much risk you want to take.
Mhm.
So it's okay to trade risky stuff, but if you have all risky things, then it's going to be really hard to sit through that. And I'm guilty of that all the time, because I like heat and I'll trade too much of it, and then I'll have to back away. And that's why I just love how you trade. Like, you just kind of have your position, you sit, you let it go, and you work all day, and
Well,
I sit and I look at the charts too much, and so I take too much action. So I'm trying to be more like you.
uh,
So yeah.
hey, that deep seek day was tough for me. So, I did not get out unscathed from that. So I had a pretty nice year in 2024. So I was giving my winners room, and I was starting to play some of the heat with the AI, and did get kind of concentrated there. So it's
It happens.
it's a good happens. It's a good reminder, right? Of
Forrest
you need
Gump
to
told
think
us
about,
that.
yep, box of chocolates. So it's a good reminder of that, thinking about your overall portfolio, and accounting for that risk appropriately. Okay, let's talk about Amazon.
Sure.
So a nice move on Friday, up 2.9%. For the week, up 6.5%. So, yet another mega cap tech name that is continuing to act well, or, joining this bull market party here, Webby. And it's not even at highs yet, but it's looking quite interesting.
Yeah, so I do have a position in this. I bought it after we added it to Swing Trader, and the reason why we did it, I don't think this is in an A plus stock right now. I love the company. I think everyone probably has a million Amazon deliveries every month to their house. I'm just like that. I think they do a great job. Besides Costco, they're the best retailer ever. Better than Walmart in my opinion. And Walmart was great back in the day. But Jeff just did such a great job by taking risks along the way in playing the long game. And he was really unique. There wasn't anyone else out there like him who was willing to not crank up the earnings and just work on the long-term plan. And so that's what he's built out. And of course, the AWS is a big deal for them. And let's go to the monthly just to get a sense for what we're dealing with. And this has the potential to have these massive, really long moves. But when it builds bases, those bases can be deep
Mhm.
and ugly. So you do have to be careful with it. But we can toggle back over to the daily. With this, it gives you some nice exit points, right? So you have today's low from a swing trading standpoint. If it went below that, you'd start backing away. Certainly on a closing basis, but really the 214 84, your original pivot, you want to stay above that. But certainly, if you're doing it more from a position trading standpoint, you could give it until underneath the 21, maybe even that low there, and let it wiggle and wobble a bit. It just depends on how fast you want to be. But what's
Mhm.
nice about having this in the account is if I've got so much other heat in there that this balances out. It should slow down the volatility in the account having things like this. And it's funny to say, you know, Amazon is being a slower and pokier stock because back in the day, man, Amazon
Yeah.
was the heat. It was like the Oklo of the world back in the day, but it's grown up and
Mhm.
it's graduated with his
Yeah.
PhD and all.
I also love what you said it on IBD Live this morning, and you've said it before, but putting your institutional fund manager hat on, right? We have the market at highs, thinking about what sort of weightings that you want to have. No one's going to get fired for having a position in Amazon, right?
So what people don't understand is the game of institutional money management from a large scale. I'm not talking hedge funds. I'm talking, really mutual funds or massive hedge funds that aren't like the gunslinger hedge funds, like the real big giant companies. They're not out there to try to kill it. They're just trying to, just slightly outperform the S&P, and that's how they gain more assets, and that's how they stay in business and keep their jobs as PMs. And so you want to think through that lens. Where, if you were that person, where would you go? Would you buy Amazon? And if that blows up, it's not a big deal. No one's going to get mad at you because of course you're going to have some Amazon. So it's all about the weighting that Amazon is of the S&P 500, Amazon or any stock, and how much do you want to have? So let's say it's 3%. It's not, but let's just say it's 3%. I don't know what it is off the top of my
Mhm.
head. Most fund managers are going to want to have between 2 and 4% of Amazon in their account. 4% if they're bullish on it, 2% even if they're bearish on it, because they don't want to have zero.
Yeah.
Because then if this goes on a big run like it's done in the past, then they're going to have to play catch up. So that's really what moves the market. It's all these edge cases like the Palantirs of the world that we both have a position in. That's not where a lot of those guys and girls want to go, because if that were to go down 70% on them and they have a big position in it, that is going to be a bad mark on their career. But if they've got a big position in Apple, Microsoft, Amazon, Google, Meta, I do have some Meta, and it goes against them on some news, or Nvidia, it's not going to, hurt their
Mhm.
career. So there's a lot of that game
Mhm.
that is going on in the market. And that's why the FNGS is moving up, because just think about it. Those are all the stocks that you're not going to get in trouble for buying. So when you're all the uncertainty in the world, what's going to happen with tariffs, what's going to happen if Iran and Israel, if that whole thing turns into a mess, or the Ukraine, Russia, or you name it, there are a million things. Unemployment starts going up, something happens with Powell. There's a million things you can worry about. But all these stocks in here, you can't get
Mhm.
in trouble. Even if they gap down 20% on you, as a
Yeah.
money manager, it's okay. It's an
Yep.
odd thing, but that's just the reality.
Fascinating. I love it. Okay, great insight there. Let's
I'll be
shift gears.
faster. I'll be faster.
No, no, we'll shift gears and talk about Amer Sports. This came up in both of our screening this afternoon. We've been watching the stock as it formed the double bottom base. It really wasn't the prettiest of double bottoms. There were prettier ones coming out of the spring action here, Webby. but it did break out and it had a nice move on earnings. It's tightened up and it's now moving higher, up 4% on Friday. What do you think?
Yeah, I do have a position in it. Let's take a look at the weekly on this.
Certainly. I'm getting there, but you can
Yeah.
tell me your
Yeah.
thoughts on the action.
Yeah. So what I like about this is in the camp not of the Amazon. Lots of the big fund managers are going to just pass this one up because it's not big enough for them to have to own. Um, and Let's go down to the quarterly numbers. So
Mhm.
you've got sales growth that is decent. It's not huge, but for a retailer, 20, in the 20s, that's really good. And you've got some, big earnings growth year over year. But of course, those are often negative or small
Mhm.
numbers. So it's easy to do those types of gains. But look at that earnings line. That is really, huge. Now, on the negative side, what's bad about it is it priced out at $13 and traded underneath that level, for a while. And so, yes, it was a the market wasn't great and everything, but still, you don't like when something goes public to trade underneath where it went public because then everyone is underwater. All the mainly institutional or really big folks that have some shares there are underwater. So that's a mark against it. And just like you said, that double bottom is really ugly. But this flat base that it formed, it's not textbook flat base, but it is a flat base that or a square box, depending on how you want to look at it, or in the spirit of a mini high tide flag because it ran up and held in tight. So you got a lot of things going on there. Up 29% within 3 weeks of the double bottom. So lots of power, and we heard our good friend Arnie, talking about how his son is, I think they
Mhm.
shop there and all the expenses,
Yeah.
that are involved with the sports for kids these days. And this is one of the places where the parents are going to have to go shell out all this money, and on the flip side, they're not the only game in town. There's other players, so this area can be fickle. But what's nice about it is it's nice and tight for about a month, and it's
Mhm.
breaking out of this 39.17. So it gives you a clear expectation that it wants to go higher, wants to go through that $40 level, and then you have a stop if you're doing it more from a position trading standpoint. I'd really just take the middle of the 39.17 and the low of this little flat area and just put like a 50% retracement of that area and use that as my stop, you know and so it's not that far away. So that's what I like, is things where I know exactly where I'm going to be wrong and I'm not going to lose a ton unless you get
Mhm.
a major gap down. But looks good. RS line is good. I give it a solid B plus.
All right. And Webby, you mentioned how current conditions, even though very favorable, can still be tricky. And I think Toast was a perfect example of that this week. Early on in the week, looked like it was poised to break out. Then we got thrown for a loop on Wednesday. That was a pretty nasty down day, down 7%, closing at the lows. But now we have this support at the 50-day line and a reversal and a bounce. So is it time to give this one a second chance here? Toast.
Yeah, I think it is. I was in there, we were buying it from that upside reversal. And then on that day, like I was getting ready to add to it. Frankly, I was going to add pretty big because I thought it was going to break out of that flat
Yeah.
base.
I think even
Um,
pre-market
yeah,
it was up
yeah,
nicely. Yeah.
yeah. I was getting ready, and I probably, if I didn't add to it, I probably should have added to it because it looked like it was going to go out. But then, for whatever reason, it started coming down. And I think what happens in the market is you got a lot of fast players in the same stock. So when they start curling, everyone wants to head for the exit at the same time. And then it builds, and everyone's like, there must be some news. Let me just get out.
Mhm.
And then it appears that it just got really nice support at the 50-day, exactly where you'd want it to get support, shook out underneath the 4110. So now it actually looks better. And one of the things that Bill O'Neill taught me was that if you're shaken out of a position and it sets back up, um, if you're going to buy it back plus a little bit. So I would always buy back plus, up to maybe 10%. So if I bought 100 shares originally, I'd buy at least 101 to 110 shares when I go back in, because it puts you on the offense. And it's a big psychological thing to be on the offense when you're trading. If you're trading defense and trading scared, it's a recipe for things to not work out right. So if you don't like getting shaken out and buying stuff back, find a different gig, because that's what
Right.
happens in the market, man. You have to,
Yep.
you, getting shaken out isn't a bad thing. It means you know how to do risk management,
Yeah.
and so anyways, if it takes out the highs from, what was that, Wednesday, that's
Mhm.
where I'd start buying it back. I mean, I probably could have bought some back today, but I was doing so much other stuff that this
Mhm.
didn't have to be done. So I was
Yeah.
focusing on what had to be bought and what had to be sold. But
Yeah.
I think it looks good. Let's go to the weekly for a second.
I was just also gonna add, I think that
Sure.
that high of that Wednesday is significant. Roughly
Mhm.
coincides with another downside reversal. So I know you like looking at those areas of significance within a base, and I do think that that is a significant level for this stock to conquer.
You catch everything. We might have to call you Eagle Eyes, and we'll have to give Ken a different title, man. So let's scroll down to the quarterly numbers.
Yes.
That's a beautiful thing, right? Solid in the 20s. What's not good is it is down from the 40s, but still it's in the 20s there. You've got some triple digits on the
Mhm.
EPS side, but again, those are low numbers, easy to get big percent gains. But the earnings line is going in the right direction. It's not as stable as you would like. Frankly, that little dip in there does bother me a little bit, but it is heat. Um,
Mhm.
and you have this base on top of this other base underneath base structure. So that last base that was underneath that base, that was in a weak position. Yes, it worked out and it had a 24% gain in a short period of time. But that's a really a weak position. And that worked out because the market lifted everything up. Now it's solid again. It's a real clear entry. Anyone can see it. You don't even have to understand charts to know that there's support and resistance there, and if it goes above the resistance, that should become support. Anyone who knows anything about charts knows that, and so that's what we're looking at. And if it goes above that, it should move up to 55, 60. That would be my base case for it. And I love what they do because they help save restaurants time and money. And that's a big deal, as well as for customers. I love when it's, someone, the server just brings around a little toast thing to have you just check out on there rather than the
Yeah.
the other procedure, the normal old school procedure.
Mhm.
So it is a new technology that saves time and money, and that's something that Bill was always looking for.
Yes. And, recently becoming steadily profitable in recent quarters. So we'll see if that can accelerate. We've seen a number of restaurant stocks performing well, turning in solid quarterly numbers, and this is definitely a part of that theme. All right, Webby, I think it's time for me to pass the baton to you.
Okie doke. Let's see. Still stressful. Still
No,
stressful
you
switching
got
over.
this.
Did it work?
Yep, SPY
Awesome.
Weekly.
Look at that. Okay, so we've got the Bob Weir take a step back, look at the weekly chart, and let's even zoom out a little bit on that. That is just a beautiful thing. I mean, it really is. I mean, just think of all the wiggles and wobbles we had to sit through to get up to fresh new highs. And forget about the news for a second and just look at this chart. That is a beautiful breakout, a massive candle with tiny little wicks on there. So we opened weak and closed strong. You can't ask for more than that. And so, like what we were talking about at the beginning of the show, is we are hoping for something like this, where it just inches up each week and is that lockout rally that everyone talks about. But even if we get an inside week next week, that would certainly be fine. Let's go to the composite, and same thing there. Just really powerful bar, and it looks like it wants to go to 21,000. Let's go over to the regression. Our good buddy Justin, the Saint, told us that this is now 47 days since our starting point, which was on 422 for our regression lines. And where are we? We are right at the white line. We are right at kind of your home base where it wants to gravitate towards. So
Mhm.
it could just inch up along there, and that would be normal and natural, like it did over here. You prefer to inch up, staying along that trend that has been established. So we'll give it 3 more bars, and then we'll lock this in at 50
Yeah.
trading bars. And then let's
And yeah,
go ahead.
and where were we Monday?
We were right here at the 0.75, which, as we've talked about, when you come down to it and then you come back up, that you guess that. And that's exactly what we did over here. And I know, talk to some people that, some veteran people that were, very, very negative, even, on the next day, very negative. And
Yeah.
that's a good thing, because if everyone is bullish, then there's no one left to buy.
Eh,
So it just put a big old smile on my face. The more negative things I heard from folks, even all week, is like, yes, you can have
Thank you.
moves
We
down.
appreciate them. We appreciate their, hesitation, right?
Yes, and they know who they are.
From a
Um,
contrarian standpoint.
yes. Oh, and I did not get a chance to put the other one on this, the 0.75 and the point 0.5. But here's the regression line on the composite, and same thing. It's just hugging that white line, and that's what you want, and that is equilibrium.
Mhm.
And frankly, going to this chart helps me out when I'm looking at the intraday chart and I'm fixated on
Yeah.
little levels that it's breaking through, and then I go, what, let me just step back and look at the regression line. And go, oh, nothing's
There's
changed.
room. There's
Yeah.
room to
Yep.
run. Yep.
So here is I'll start with SPY. Here's the 50% retracement that we started with back in the high in February, and then our low in April, and we're back up to highs. So not much to say there. Same thing with the NASDAQ. So we could move on. And the levels are, I'm going to probably clean this up some more. Let me blow this up. And we'll start off with SPY. So now at fresh new highs. So our lines in the sand that are really kind of relevant aren't necessarily these, because those were levels that we wanted to get above. The one on the downside that I would be very concerned with is if we came down to the 591.89, which is the low from Monday.
Yeah.
And if we were to close underneath that, in fact, that should really become a red line, and
Mhm.
in the line in the sand for the short term. And let's take a look at the Nasdaq, and the same thing here, the 19,334.98, which was the low from Monday. That becomes the most important level. Now, these other levels that we were able to go through, as if we have an inside week next week or we come back in, you want to see how they handle themselves around there, which are kind of coincide with the high over here, or some levels, some key levels over here, like the highs from back in February and such. So there's a lot more levels that I could put on here, but it just was getting a little too cluttered. Then what we like to do is just keep it very simple and just look at just the 21 day. I mean, isn't that a beautiful chart, Allie?
It is beautiful. This is my fave.
Mine too, frankly. And here's the composite, same thing. So we just look at that before we look at the Webby RSI, because again, we're going to switch over to the Webby RSI, but all that's doing is measuring the low versus this line. And this is something I developed just to keep myself in line with what the market is actually doing, not what I think it's going to do or what I'm scared it might do. So let me switch over to the next one. Let's see. I got to get better at this. Okay. So you can see the SPY.
I sure can. I'm
Okay.
seeing the
So
Webby
here's
RSI.
the Webby RSI on here. And we've got, this building up to, it's now a 1.5 ATRs distance there. And last time when we were getting going back in mid-May, we got up to right around 2. So we want to surpass that. I'd like to get up to 3, but we will see which 3 is over there. And we will take a look at the NASDAQ. Oops. And this one is up like 1.7 ish. And last time it got up to about 2.6 or so. So we wanted to surpass there as well, but it's looking good. We'll take a look at my daughter's favorite indicators. And this is the Bob Marley percent off high. And so the green shaded area is just saying that it's within 4 ATRs off of its high. And this is solidly, and this uses the close. That's why it's further away from there, or it uses the low, not the close. And so we're right up there near highs. And then the same thing with the Nasdaq, and we will just toggle over to um, the RSP. The RSP is back up into the green
Sure.
area, and we wanted to go a lot further than that, but can't always get everything that you want.
Yeah, but I'd say this week we got a lot that we wanted. We
Oh
got
my
quite
gosh.
a bit that we wanted.
Yeah, the Monday was everything. Like, how it got support there was it
Pivotal.
was textbook. That's why we studied all these charts. That's why we came up, that's why I came up with the 21 day as being a key in the market. In anyone who hasn't used or hasn't studied it yet should go back on just major bear markets and major bull markets and just look at the 21 day. Just focus on just the 21 day, the relationship. When you're going down, the high just stays underneath it. And when you're going up, the low just stays above it. And is sometimes the simplest things are the most powerful, rather than looking at the put to call and the VIX and the bull to bear and the this and the that and the other thing, the anything to just confuse the heck out of you. Just look at the 21 day.
Yep. I'm with you, Webby. All right. So, with everything that we've discussed, let's now talk about the battle plan for the week ahead. We're in new all-time highs. A lot of the leaders are still working. We're seeing new setups, new breakouts. It's not easy. I mean, nothing's going to ever be handed to us on a silver platter, even in a power trend. But what do you think the game plan should be for next week?
Well, one, you want to prepare for the worst always, because especially when things look picture
Yeah.
perfect, and almost every time we say, "Oh, things look picture perfect," because they do, then we get some negative news
Mhm.
that comes out of the blue. So you want to be prepared for the worst and hope for the best. So go through all of your holdings, rate everything A to F. If you've got something that's an F, especially if you're down on it, kick it out. Get rid of the things that aren't working for you, and then focus on the ones, your A stocks or your B plus stocks, and figure out ways to get bigger in those, not just buying them willy nilly. Although there's something to be said for that, frankly, because Bill would buy and add to on almost every blue day on his favorite stock, but incrementally, just little
Mhm.
baby
Mm.
amounts. But that's kind of advanced. But look and see, where is it logical to increase, and also where are the lines in the sand. You could have your pet stock, your favorite stock, and if it does something funny, you have to exit out of that, and you could have different levels. It doesn't have to be all or none. You could, just break it up into maybe five, like 20%, 20%, 20% at different levels,
Yeah.
and to help out. But also try to be very careful with your entries, because we're going
Yes.
into a holiday week. And then before you know it, we're going to be in earnings season, and then that's going to be a whole nother risk element. But right now
Mhm.
we've got this thing that could be a positive risk, because if the market is just rolling, if that train keeps it going, that we could the global markets could rally, late Thursday as well as Friday, as we're shutting down early on Thursday and not trading on Friday, and then we play catch up on that Monday. That's a best case scenario. But like I said, you want to prepare for that not being the
Mhm.
case. And
Yeah.
yeah, I think this is a bull market. Turn off the news, turn on IBD
Except for
Live,
this. Yeah.
look at the charts.
Yeah, and the point that you made about proper entries is something that I wanted to emphasize as well, because when you are in an environment where the wind is at your back and you have all of this bullishness that you and I are seeing from our perspective, I think sometimes folks out there can take that and just maybe get giddy, stealing a word from our friend Arnie Gutierrez, and maybe turn the aggressiveness into buying willy nilly stuff that's
Mhm.
out of position, which you really want to be careful about that. Even though we have really positive conditions right now, getting those proper entries is everything, I think, or a huge part of the risk management picture. Sometimes in a strong market, you can get away with buying
Well,
things that are really stretched, but you do need to be careful. You can't just buy anything. You really need to think about where you're managing that risk.
yeah, and I will say, just the reality is you're going to miss stuff. I miss stuff all the time. Bill missed stuff all the time. And when you're in a bull market, you want to figure out what the leaders are and then figure out a way to get into them. That's
Yeah.
something I learned from him that, let's say we missed something, we didn't have it on our institutional list. Think of it like leaderboard swing trader, but what I did with him for the institutions, and we could only trade stocks that we had on our list. The PMs could. So we would put them on, sticking straight up in the air,
Mhm.
and then figure out a way to get into it. And your risk management is knowing that you're not going to take more than X percent, 7%
Exactly.
max. So
Yeah.
even if you buy it stretched, and he would do that. I know people think that he only bought it right at the pivot, exactly there. That's not the reality. He would find the very best stocks and try to figure out a way to get into those. And you've got to be willing to sell them and buy them back.
Right.
Like what we were talking about with Toast, and Toast might not even break out next week. But if it does, if you're shaken out of it or
Mhm.
something similar, you've got to be willing to buy it back and then maybe get shaken out again. And that is the game. And that's why you've got to figure out how much risk do you want in the market. So back into the math on it and just say, okay, if you're going
Mhm.
to buy a stock, how much, if it hits my max loss, how much is that going to take my account down? And do you feel comfortable with that? And then
Mhm.
if you don't, then just change the values either by a smaller
Mhm.
position or maybe sell off some other riskier assets to be able to withstand that potential pain.
Yeah. All right. Well, great context and nuance there that you, as an expert, are able to provide. All right. Song of the week. Hit us with it.
Well, so it started off at the bottom and it was a Bon Scott song. And then as we moved up, it became a Brian Johnson song. So what am I talking about?
This is
Everyone in the audience knows. No, five people
ever.
know. So at the bottom, it was Bon Scott, AC/DC, Long Way to the Top,
Yes.
if you want to rock and roll.
Of
And
course.
then now that we're at new highs, is Back in Black.
Yeah.
So that was, you know, love it. So what is your song?
I didn't I'm piggybacking off of you because
Okay.
I'll be the AC to the AC/DC Back in Black. Yeah.
I love it. That's awesome.
Yeah.
And I need to figure out a way to see AC/DC while they're still touring,
Yeah,
and
me
I wanted to see him with
too.
Joe, and he went to go see him. He asked me to go with him, and I just couldn't make it out to
Aw,
Vegas. And oh God. Oh, I did want to say
yeah.
I did do a podcast this week with our regular guest on IBD Live, David Keller, and his market misbehavior podcast. So that should be dropping later today. I was just looking to see if it dropped yet. I don't think it came out, but should be later today or maybe tomorrow. So hopefully you guys can catch that. We talked, IBD Live. We talked about all
Very
sorts
cool.
of cool things. He's a great guy and
Yeah.
super smart. Super
Yeah.
smart.
Yeah, we love having him on IBD Live and the podcast. And so, Webby, I'm sure folks will be like, where can I find that? Make sure you are following Webby on X at Webster1971. And he will be
I'll post it.
posting, yeah, he'll post the link when it drops so you all can check it out there. All right, Webby, pleasure as always. And we'll see you next week, right? We've got it. It's
Are we
going
doing
to
it
be,
Thursday? Are we doing
yeah,
it?
I think we should do an early Thursday,
Okay.
Friday SMT.
Okay. That works for me.
Okay, sounds good. Thanks so much. We'll see you then. And thanks everyone for tuning in. That is it from us for this week, but we will be back starting Monday morning on IBD Live. And that's investors.com/IBD Live for all the details. We'll see you there starting 10 minutes before the opening bell for lots of fun for the first 90 plus minutes of trade. And then we'll see you back here after the close for our stock market today video. So we hope you have a great weekend and we'll see you back here next week.